Welcome back. You've joined us on Buy Now, Sell Now right here on eTap. Us all your stock-specific queries, and we will get them answered over the course of the next 1 hour on this show. We will also have experts lining up in the next few minutes. Ping us your question on the WhatsApp number that is flashing for you on your screens. Mention the name of the company, the quantity that you're holding, your time horizon, and we'll try to answer as many as we can over the course of the next 1 hour. And to discuss exactly that and to answer all your stock-specific queries, we now have two experts joining us on the show. Gaurang Shah, Senior Vice President at Geojit Investments on the fundamental side, and on the technical side we also have Vikas Jain, Head of Research, Reliance Securities, now joining us. Gentlemen, thank you so much for taking your time out and joining us here on ET Now. And we already have our viewers who have started sending us their queries. And first up, we have Jayesh, who has written to us from Mumbai. He has purchased about 600 shares of Delhivery with a long-term perspective. They were bought at 423 rupees per share, and he's asking if he can add more at the current market price. Gaurang, what will your view be on this particular stock? Delhivery is the stock that we're talking about.
Thank you so much for having me on the show, and morning to all of you all. So I think this entire logistic pack was buzzing some time back, and then of course we had the whole host of newcomers coming in the sector and the competition getting elevated. Unfortunately, we don't have any specific coverage on Delhivery, so I won't give any stock-specific buy, sell and hold. But yes, the sector looks promising, and this company Delhivery largely caters to the e-commerce platform, if you will. And the footfalls over there are increasing. Along with that, competition is increasing. Possibility of this particular company capable of garnering a larger market share is definitely there. It would be interesting to see how the expansion plans works out for the company. So the sector is good. This company can gain in the future by more footfalls and more players coming in terms of garnering larger market share. No specific comments since we don't have a coverage.
Right. Vikas, can you do a quick technical check on Delhivery, because he asked about whether or not he can invest at the current market price?
Look at the stock, the structure has been pretty positive over the past few weeks. We have witnessed a good amount of up move from those lows of 265 to 70 odd levels, and the stock has now moved to the higher band of 355, 360. So the stock is being completely overbought at current levels on very shorter term time frames. Because if you look at the 200-day average is placed near to 385, 380 would remain some amount of resistance area. So some price correction or time correction could be possibly be invited into the name, because post results the stock had a strong pair up, but there is no follow-up buying after the strong move. So we expect the stock to retrace back near to 320, 325, which is the band of averages. So at that point of time, we can invest.
The view on Delhivery. We got both fundamental and technical view on this particular counter. But we now have J. Saravanan, who has written to us from Chennai, and he has a both short and long-term question for Ashok Leyland and Canara Bank, and he wants to review his positions on both these stocks. Let me come to you, Gaurang, first. What will your view be on both these counters? One is Ashok Leyland and other is Canara Bank.
So firstly, let's talk about Ashok Leyland. The numbers were much better in terms of expectation, what the street had and what the company delivered. Possibility of more improvement in the coming quarters cannot be ruled out. Demand for multi-axle heavy tonnage vehicles is going up. So is demand for heavy, medium and light commercial vehicle, and Ashok Leyland is the only player who only manufactures, in fact, commercial vehicles in all the categories. Foray of switch mobility can also add to the performance of the company. We have a positive coverage on Ashok Leyland. We have a buy recommendation from a long-term point of view. So if you bought it, hold on to it from a long-term point of view. If you not, then you can stagger your buying and start at current levels and stagger your buying. As far as Canara Bank is concerned, as you were mentioning, at least today, the performance is not up to the mark, but not to forget, I think most of the PSU banks have recovered from the lows prior to the fourth quarter earnings and the dismal performance in the third quarter earnings. Our view at Geojit Investments Limited is that the banking sector, along with private public as well as non-banking finance companies are going to perform well on fallback of higher credit demand, improvement of asset quality, and provisioning coming back. Interest rate cuts have happened. We expect in the month of June, when the credit policy is there, one more rate cut to come through, which will enable more credit offtake and growth of loan book. On Canara Bank too, we have a whole recommendation from a long-term point of view.
Okay, so that's the long-term view on both Canara Bank as well as Ashok Leyland. Ashok Leyland today, of course, is in focus after it reported its numbers. But what will your view be, Vikas, on both these counters on the technicals, Ashok Leyland and Canara Bank?
So both the stocks looks pretty promising. If you look at Ashok Leyland post the numbers has reacted positively. On the higher side, 245 to 50 is a multiple band of resistance area. So that is being crossed. So the stock would have a vertical breakout, which would get extend near to 65 to 70. So the stock looks pretty promising on an immediate short-term to medium-term basis. Canara Bank, no doubt positive view on the long term. Some amount of recovery has taken place in the PSU banking space. It has been a laggard overall in the PSU banking space compared to Bank of Baroda or Indian Bank. But the structure looks pretty promising. So Canara Bank can also head high near to 112 to 113 on a medium-term basis.
Right. Next query coming in from Pune. Raghunathan is asking about Tata Chemicals short-term view. He is holding at the rate of 815. So he's definitely making some profit. Vikas, what will you suggest?
So it's a strong buy, a strong candidate, because the stock has massively underperformed in the world chemical space or in the Tata Group space. But differentially, the stock has welded its band of some long-term support areas near to 820, 835. It is on the verge of a strong breakout candidate from the current levels of 875, 876. We believe a strong move comes in through, then the stock could head further high near to 945 to 950, which will be the first potential target. And if that is being crossed, then 1020 could be expected. So strong positive view on the name.
Okay, so positive view coming in on Tata Chemicals, but we also have Nikhil Sharma, who has written to us from Mumbai. He's holding, he says he's an intraday trader and is holding 100 shares of Crompton Greaves Consumers at the price of 353 rupees per share. And he's asking, when will it be the right time to exit the stock, or will it be better if he continues holding on to this position? Vikas, looks like he's a short-term investor. What do charts suggest for Crompton Greaves?
From an intraday perspective, the view remains pretty neutral because the stock has not seen some amount of move. No doubt it witnessed some amount of volatility post the results, but the second leg and third leg of follow-up buying has been witnessing not being so great. So we believe the stock will face some amount of pressure, so we can exit the stock at current levels.
Query coming in for HCC. Holding price is around 40. And Gaurang, what will you advise on HCC per se? Because the viewer is definitely making some loss here. But what is 12 to 15 months view?
Well, see, I think if you're looking at investing in infra-related companies, there are better names to look at, to be very honest. This company, we know the track record, the past history. There were efforts to, clean up the balance sheet and revive the performance, but it has hardly reached anywhere. No specific comments again on HCC, but we do, as I mentioned, like the sector, infrastructure, construction, engineering. And if I have to recommend a switch, though I won't be specific, then at Geojit Investments Limited, we are positive on NCC Limited, which is a peer competition for names like HCC. In terms of balance sheet, in terms of strength, in terms of order book, in terms of execution of order book, in terms of performance, in terms of earning visibility and future growth, my sense is that NCC will fare far better compared to a weak name like HCC Limited.
The advice coming in for HCC that you should shift to NCC instead. With this, it's time to take a quick break, but don't go away. We will try to take as many as stock queries after the break.
Welcome back. You're still tuned into Buy Now, Sell Now right here on ET Now, and this is a show where we address all your stock specific related queries. So keep sending them and we'll try to answer as many as we can over the course of the next 40 minutes. But let's keep it going then. We also have experts who are already lined up for us on the show. And we have Manoj, who has written to us from Mumbai. He holds about 500 shares of DB Corp, which were bought at 315 rupees per share. The stock currently trades at 245, which means he's making some amount of losses on this particular holding. DB Corp, that's the stock that we are talking about. He has not mentioned his time horizon, but Vikas, technically speaking, what do the charts suggest for this stock?
So if you look at DB Corp very closely, the stock has been just trading in a particular very narrow range between 220, 210 on the downside, 255 to 60 on the higher side. The stock has been just breaking down, and we believe this stock could see some amount of weakness and positive momentum above the 50 to 55 levels. So if you break down the media sector is witnessing some amount of performance. So DB Corp could also, relative basis, could see strong upmove. Maybe 345, 350, its purchase price would not come in, but we expect an immediate target of around 280 to 85 over the next few weeks, if the stock has witnessed some massive positive price action and volume participation.
Next query coming in from UAE. Amit is asking that he has made 14% allocation to KEC. The results are today. He has 500 shares at the rate of 700. So he's definitely making some profit. Gaurang, you would have noticed he has specified 14% allocation to KEC. What should he do?
Well, see, if you are a long-term investor, I think cap goods engineering sector, which is a sector where this company belongs to, is likely to do extremely well. On this company, KEC International, interestingly, has about 3 to 4 different business verticals which contributes to the balance sheet. We've been positive on this particular company for a very long period of time. Our targets are somewhere close to about 950 approximately from a long-term point of view. So, you're making a decent return from the levels where you entered. You have a 14% allocation. I think it's a decent enough allocation towards a company like KEC International in terms of earning visibility. We'll continue to hold on to it from a long-term point of view. The best thing about that investment is the level of investment. I believe 700 rupees is what you said, and where he's got invested. So your risk reward is extremely favorable from long-term point of view.
Reward is extremely favorable from a long-term point of view. That's the view coming in on KEC International. But we also have Krish, who is aged 60 years, and he is writing to us. He has a question for Gaurang sir, and he holds about 50 shares of Eicher Motors at a buy price of 5,100 rupees per share. He wants to hold on for a minimum period of 3 years. What will your advice be, Gaurang, on this stock, Eicher Motors?
Well, I think it's one of the best suited stocks, isn't it? I clearly remember, I think it was about some time back when Royal Enfield product, which this company has, the high-end motorcycle 350 plus, faced the competition from two Indian companies with respect to their GVs. One was Bajaj and the other one was Hero MotoCorp. Hero Harley and I think Bajaj Triumph. I clearly remember the Eicher Motor at that point of time was trading at about 3,300 rupees. And when this news unfolded simultaneously as a competition for Royal Enfield motorcycles, Eicher Motor slipped to 3,000. We had maintained a buy at that point of time, and if somebody would have listened to our advice, would be laughing his way to the bank in terms of the profits, almost about double the kind of profits you're making currently. Stock trading at about 5,400. We have a positive view. Along with this high-end motorcycles, they have their commercial vehicle business and a JV with Volvo. I think long-term continue to hold on till the time you don't need money.
Right, that's the advice coming in from Gaurang to Krish, and thank you Krish for writing each day. And Gaurang, you would have noticed he specifically mentioned your name in the question, so that is something. I mean, he's a regular viewer of ET Now, and plus he's currently watching the show and telling specific query to Gaurang. But moving on, Shashi from Mumbai is asking about EMS sector for 5 years, also specifying having 100 plus PE. So buy around which level? Gaurang?
Sorry, I couldn't get the question. Can you just repeat?
Electronic manufacturing sector, what is your view?
Well, I think the sector is it's looking extremely well. Look at the kind of uh, support that the sector is getting from the government. Uh, I also read about a report that there is possibility of further extending support to the entire EMS segment, including chips and semiconductors. I don't recollect having any specific coverage on this sector, but you have names like PG Electroplast. Of course, this is not a recommendation. I'm just suggesting name companies which are associated with this sector. You have names like Discrete Technologies, which has again, performed quite well if you look at the last 2 years track record from the levels where Discrete Tech was to the level that it went to and then it corrected. So the sector looks extremely promising. Unfortunately, we don't have coverage currently, so I won't be able to give you a specific name, but it's an interesting sector to look at.
Interesting sector to look at. That's the view coming in on the EMS sector. But one more question that has come in for Gaurang, and this is also a longer term question. Kunal has written to us. He says he's a 24-year-old student and a professional cricketer staying in Kalyan. He had purchased NHPC at 26 rupees per share, Vedanta at 270 rupees per share. He wants to ask if he should continue holding on to both these positions or should exit and buy SBI Card or HDFC Life for long-term investment. What will your view be on both these stocks, and if he wants to switch, which will that other better idea be?
So, firstly, a slight correction from my side. On the earlier question, that is the EMS segment, we have a positive coverage on PG Electroplast from a long-term point of view. I just stand to correct myself. So if somebody is interested in the EMS segment, the PG Electroplast would be the stock that I would recommend. The second question was, the first one was NHPC, and the second company, I'm sorry, I lost the track. Which was the second company?
He wants to exit out of NHPC and buy SBI Card or HDFC Life. So that was his question. Okay, and Vedanta. So, Vedanta is the question that he's talking about.
Okay, so Vedanta, again, a diversified natural resource company now. There is a news flows which are positive. On a fundamental side, we have a whole recommendation on Vedanta. The second question on NHPC, whether he should sell and shift to HDFC Life, was the other alternative that he has suggested. So we have a positive coverage on HDFC Life from a long-term point of view. So if you think that it is appropriate for you, you can act accordingly and make the move as far as the shift is concerned towards HDFC Life.
Right. So questions coming from all age groups from 24 years to 60 years, Ashesha. Next query is from Hyderabad. Ravindra Chand Kumar is asking about Tata Motors. He has bought 200 shares at 650. What should you do, Vikas?
Tata Motors, the stock had witnessed a vertical sell-off from the highs of 900 since last year it been made. And now then stock is forming strong amount of bottom of formation near to those 620, 630 areas. I believe we can continue to hold on. The demerger process is on the cards, which is expected somewhere around September, October, and the stock should do pretty well. So we believe the stock has the potential to retest 845, 850 on immediate basis. And if that is being crossed, then 910, 920 could be possible. So continue to remain positive. If somebody wants to add, he can even add at current levels.
All right, with this, it's time to take a short break, but don't go away. We'll address more queries after the break. Welcome back after the break. You're watching Buy Now, Sell Now. Let's move on to next query, which has come for Bank of Maharashtra and HDFC Bank. Ignatius from Kolkata is asking, he has 700 shares of Bank of Maharashtra at 42.12 and 100 shares of HDFC Bank at 1413. Vikas, I want to get your view first.
In terms of HDFC Bank, he can continue to hold on. The stock is witnessing strong amount of move since the last few months and quarters, and CLU 52-week high. Believe the stock has the potential to move higher near to 2050 to 2200 levels in the next few weeks. The private banking space continues to look pretty attractive, so we can continue to hold. In case of Maharashtra Bank, the stock has witnessed some amount of consolidation between these 45 to 50 odd levels. Since then, it has given a breakout above near to trading higher near to 50, 51. On immediate basis, there is a minor resistance near to 54, 55, which is the 200-day average and the recent top. So if that is being crossed, the stock can move further higher near 260 to 65 band. So we continue to remain positive on both the stocks, Maharashtra Bank and HDFC Bank.
Okay, so positive view coming in on both these counters, Bank of Maharashtra and HDFC Bank. But we have Rajpreet Singh, who has written to us from Ludhiana. He is holding some shares of KEI Industries, about 25 shares, which were bought at 3,600 rupees per share. And this question is for you, Gaurang. What will your advice be on KEI Industries, especially after the intensifying competition the company is facing in the wires and cables business with Ultratech's foray now? Do you think competition is likely to intensify going forward for this stock?
So we had an initial coverage on the positive side, but as you rightly mentioned, Shisha, that competition is going to increase, and the competition is coming in from real niche and marquee names with some, decent capacity, and there is all possibility that cutthroat competition will lead to pricing downwards and discounts, which will eventually translate into difficult times for players like KEI Industries. So our initial coverage, which was on the positive side, we have now given a sell recommendation with a target somewhere close to about 3,030. So I think it's better to make a switch and come out from this company.
All right. Next question is from Bengaluru. Rosa is asking, should I average IGIL or holding 175 shares at the rate of 446 per share? Vikas, your view?
IGIL, in terms of it, the stock has witnessed good amount of volatility post its listing, and we believe the stock continues to move on with circuit to circuit. So it's better to avoid the name because we have witnessed good amount of corrective action post the IPO and the listing price. And the stock has moved recently from the lows of around 300 to 375. So would not be so greatly positive onto the name because you have multiple band of resistances near to 410 to 420. So it's better to avoid.
To put the spotlight on KNR Constructions, we have Anil, who has written to us from Pune. He wants a fundamental view on KNR Constructions. He's asking if he can purchase at the current market price with a time horizon of about 6 to 8 odd months. The time horizon is slightly lower if we look at the point of view from a fundamental point of view. But Gaurang, what will your view be on KNR Construction?
Well, so we have a neutral rating on KNR Constructions. And as we were discussing earlier in the show, names like NCC Limited or even PNC Infra, HG Infra and Engineering, these are relatively stronger names compared to the question that was asked with respect to HCC Limited. So, I mean, though it is a very short-term time horizon that the investor stroke viewer is asking me, but in case if time is not a limitation and if you have the time by your side, then I think infrastructure sector overall will do extremely well. And like I mentioned, on KRR Constructions, we have a neutral rating on the stock.
All right, next question coming in for HUDCO. Rohit is asking, he has 700 shares of HUDCO at 281. Vikas, he should average out on this stock?
The stock looks pretty promising, no doubt about it. Today it's been higher by 4.5%. But I would not recommend to average because if you look at the structure, the stock has witnessed a vertical fall from the highs of around 320, 330, from the bottoms of 160, 165. It's already up by around 50% near to 235 levels. So maybe we could wait for some amount of more move near to 255, 260 odd levels, and there it would potentially exit the name with a minimum loss what it could achieve. So it's would not recommend to average at current levels.
Okay, so that's a recommendation coming in on HUDCO. Vikas and Gaurang, thank you so much for taking your time out and joining us here on ET Now and addressing all our stock-specific queries today on the show. But that's all the time we have on this edition of the show. But don't go anywhere. Markets at noon will come up on the other side of the break. Stay tuned.
If you like this video, then like, share and subscribe to ET Now.